The idea of being paid monthly for companies you don't work for or have to punch in for is wonderful. In today's video, we're going to go over 4 monthly paying dividend stocks. Hello everyone and welcome back to my channel. For those of you who don't know me, my name is Tyler Rice. I'm a business and finance student and I post financial content weekly. I make these videos in order to give those who don't have the same access to education that I have information regarding finance. However, with that being said, I am not a financial advisor. I'm simply a random guy on YouTube sharing my thoughts and opinions regarding finance. So just a quick overview, a dividend is a portion of a company's profits that they pay out to their shareholders. I get this strange sort of excitement whenever I'm paid a dividend, especially when I'm paid a monthly dividend. With that being said, without further ado, let's get right into the list. All right, so first up on the list, and of course, you know I had to bring a heavy hitter first, but it's Realty Income, ticker symbol O. So just to give you all like a little background about Realty. So they purchase and lease commercial real estate to tenants such as like 7-Elevens, Walgreens, and even Walmarts. So Realty has a dividend yield of 4.41%, which I think is pretty decent and safe overall. With that, it pays out a yearly dividend of $2.80. So let's say for every one share you own, that's how much you make per year. And you know, I know that's a lot of money, but you know, let's calm down, let's relax. So anyway, they have a payout ratio of about 42%. And so Realty is one of the more, reliable dividend REITs, in my opinion. You know, they've been paying out their dividends since 1994, and that's even before I was born. Also, since they have, they've been increasing their dividend payments for the last 25 years, they're considered to be a dividend aristocrat. So for me, this is a company that I certainly plan on holding for the long run. And, granted, we're in an age of technology. These tenants they lease to are mostly companies that are long lasting. Next up on the list, we have Apple Hospitality REIT. Apple Hospitality REIT, it's a REIT that has about 233 hotels within their portfolio. So I can't see how hotels are going away anytime soon in the future, with lucrative businesses such as like Airbnb and whatever else comes about. I can see, hotels being hurt in a way. However, in our current way of life, I can't see hotels going away. Of course, that's not to say that it's impossible that they won't go away. But this is another company that I hold in my own portfolio, so hopefully you all see a trend here. But they pay a dividend yield of about 10.68%, which I think is pretty high. And that's also mostly in part to and due to the current economic situation. I talked about this in one of my previous videos about why companies raise their dividend yield. So if you want to learn about that, you should go check that out. But anyway, their yearly dividend is currently sitting at $1.20, which is 10 cents per month. So they actually did cut their dividends because of the with everything that's going on with the crisis. However, they are aiming to bring it back in October, and so their ex-dividend date is October 30th. So their ex-dividend date, that means the last date you can purchase a share in order to receive the dividend on the payment date. For me, I'm really loaded up on this company as well. Right now I have only around 20 shares, but nonetheless they have a payout ratio which is just under 20%, and I kind of think that's actually perfect for their company, especially with them being invested in hotels. I feel like they're not really overextending too much with this dividend payout ratio. All right, so number 3 on the list, we have Stag Industrial. And of course, you may have guessed it, this is of course another company that I own in my portfolio. So Stag is also a REIT. They generally target and own single tenant industrial properties. So Stag isn't, their price isn't really killer. So their current price is around that $30 price range. Like I said, it's not too expensive. They pay a monthly dividend around 12 cents, which means their annual dividend is $1.44. So their current dividend yield is around 5.17%, which is, it's perfect, especially with everything that's going on. They're not talking about taking or cutting their dividends whatsoever. They're actually paying a dividend on June 15th, which is this Monday, and they actually confirmed the payment for July 15th as well. With that being said, their payout ratio is just under 40%, and it's sitting at 38%, which is a little above my sweet spot. However, I think and I know that it's still doable for their company, and they generally pay out their monthly dividends between the 15th and the 18th of each month. Last but not least, we have Main Street Capital. Just like most companies on the list, Main Street Capital is quite affordable as well. It's around that $30 to $40 price range. So Main Street Capital is a company that they invest and subsequently they help smaller private businesses grow by offering a debt to equity capital. So this isn't a company that I currently own, but it's on my watch list, and I plan to own it in the very near future. But without further ado, let's get into it. So their yearly dividend is sitting at $2.46. So let's say for every 100 shares you own, that's $246 you get every year. They have a pretty decent dividend yield. It's about 7.43%. I believe this company actually cut their dividend as well, because their next payment date is September 15th, while their ex-dividend date is the 18th of August. So although they are a monthly paying dividend company, since they cut their dividend, they'll start that process up, like I said, the 15th of September with their ex-dividend date being the 18th of August. So if you want to receive those dividends, get into Main Street Capital before the 18th of August. All right, everyone. So that's the end of the list today. I hope for those of you who don't invest, I hope I was able to provide you with some new information regarding a few stocks, that I'm interested in and that maybe you might have some interest in as well. And for those of you who do invest and currently are invested, I hope I was able to reiterate some of that information. I know today was a short video. I simply wanted to put some information out there for you all to learn something new. But as always, make sure whenever you're investing, you're doing your own research and doing your, of course, your due diligence. The stock market can be your best friend and it could also be your worst nightmare. But as always, I would like to leave you all with a quote. The 4 most dangerous words in investing are, "This time is different." Stay safe and be frugal. And until next time, thank you.